Today, we're speaking with Charles Haworth, partner at Radnoff Haworth. Charlie, how is an independent contractor taxed differently from, say, an employee?
So an independent contractor is essentially a self-employed person, whereas an employed person is an employee. And so an employee, as most people know, receive a T4, and all of their taxes are deducted by their employer. And so all they receive on a bi-weekly, monthly, weekly, whatever the pay period is the net amount that is payable to them. So they don't really have to worry about taxes because it's all been taken care of by their employer. And so they get to spend the money that they receive as they want, save it, whatever. An independent contractor, as I mentioned before, is more like a self-employed person. And so that when they receive money, they might be issuing invoices, which would require an HST number. They might have a business number. They're going to have to open program accounts such as HST. They might have employees, their own employees underneath them, who they're paying, and they might have to have an RP account as a payroll account. And so it's really just a business. And so there's going to be the requirement to collect and remit HST. That's going to be the primary concern for a self-employed person. And then at the end of the day, depending on the structure that you use, whether you're just a person, whether you're doing this through a corporation, there's going to be various filing requirements and income tax paid at the end of each year. And there may even be installments that are required by CRA throughout the year for those taxes.
For tax purposes, is it possible for an independent contractor to be reclassified as an employee?
So many employers do like to sometimes, because it's simpler for them in terms of accounting, it's cheaper because they don't have to do source deductions and things like that, and CPP payments. They like to classify their employees as independent contractors, and that is normally seen through, unfortunately, by CRA, because the independent contractor only has one person he works for. The tools are supplied by that person. And so there's all these factors that will be looked into by CRA to determine whether they are truly independent or not. And unfortunately, it's pretty obvious when someone is just an employer dressed up as an independent contractor.
How can a contractor manage their tax payments to avoid unwanted surprises at the end of the year?
So get a good bookkeeper. I think I wouldn't have 90% of my cases if my clients had good bookkeepers, and they should keep you on the straight and narrow, as it were. But there's various practical things to do that I normally tell people who've got into trouble. Have a separate account for taxes. Every payment you receive from a client, say you issue an invoice for $100,000 and you receive your $113,000 because you collected the HST, put $20,000 into the tax account, put $30,000 in the tax account. Make sure that HST is being paid. And then depending on what you earned the year before, you should be making installment payments as well, voluntarily. I wouldn't sign up for it, so you end up with CRA collection officers chasing you. But you can make payments throughout the year to CRA to the various accounts by check, by wire transfer, whatever. And therefore, at the end of the year, when you file your returns for the previous year and you get your notice of assessment, it won't say balance owing $80,000 or whatever that amount is.
I'm Brianna Fox, and this has been a Tax Talk moment. Don't forget to like, follow, and subscribe.